Hi everyone, today we're going to talk about Tattooed Chef, and we're going to talk about Tattooed Chef because the month of August was a very volatile month for this stock. At one point the stock crashed and it crashed 25% in 7 days, and because of that crash I think there's a few lessons to be learned from the month of August and Tattooed Chef stock going forward. So hope this video is useful. If it is, hit the like button. If you are a patron, make sure you go check it out. There is a new exclusive video up there which is my UK portfolio review, which is going absolutely amazing. Some really good gains on there with S4 Capital and Greggs, so do go check that content out. If you aren't a patron and you do want to see the exclusive content, make sure you join through the link in the description. And as well as the exclusive content on there, you also get a Discord with 600 members on there. And if you do want to start investing, there's some links to some brokers in the description, like Freetrade, like Stake. You join through there, you get a free share as well. But enough of that, we'll get stuck onto Tattooed Chef and some of the things that we can learn from the crash in Tattooed Chef that happened in August. So if we look at the stock chart of Tattooed Chef, you'll see after earnings the stock dipped 25% in 7 days. Now since the dip where it went down 25%, the stock has actually recovered all of that dip and even gone higher. So it has been very volatile. It had a massive share price sell-off. When you think about considering that 25% of the share price, that's a massive sale on that share price. And sometimes with them sort of crashes or them dips in share price, you've got to start thinking, is this an overreaction? You know, to lose 25% in 7 days is a huge amount, and you've got to start considering, is that a overreaction? Because sometimes when you see these share price movements and these drops which happen so fast, sometimes you think, and these can be the best buying opportunities, you've got to consider, is this a really good buying opportunity? Because you are getting an asset that lost a huge amount so quick. These are the potential things you want to be looking for to try and invest and make it good money on. So first of all, the 25% dip, it was actually caused by earnings. So when Tattooed Chef reported earnings, the earnings came out. I was a bit disappointed with the earnings. They should have been better. And I actually made a video about it. And when I made that video about Tattooed Chef earnings, I said, look, I'm a bit disappointed, but you know, this is only one quarter. And I expected when you miss I think it was the revenue was missed by 3 million. When you miss revenue by that much, I was thinking, okay, it's probably going to get punished. It's probably going to get punished maybe 4%, maybe 5%. Next thing we know, the stock opens up and the stock's down 20%. And the few days afterwards as well, it ended up being down 25%. So the dip was off the back of earnings. Now, sometimes when stocks have this massive pullback, they can be off earnings. Sometimes it could just be news in general. Some news comes out that spooks the market and the stock goes down. But yeah, there was a massive dip off earnings. And sometimes, like I said, you've got to look at these opportunities and think, realistically, has this company just reported earnings where it loses 25% of its valuation? And that's where you got to judge. It's the same with when stocks kind of go up as well. When stocks go up a huge amount, you've got to look at them stocks that shoot up and think, okay, that stock's just gone up 30%, but that news that's just come out, does the company deserve to shoot up 30%? If it does, then you go, fair enough, leave it. But sometimes you consider going, probably not, maybe is it time to sell? And that's what I try and do. When stocks have a big massive correction, look into it, think, is this a great buying opportunity? And same when stocks go up, thinking, is this time to start trimming some? Is that a bit of an overreaction to that? And historically, if you look at a lot of the best investors, how they sort of think is that sort of mentality. The people that have the mentality of, oh, the stock's gone down, is it now time to go sell it? Or the stock's gone up, now I'm going to buy it. Them sort of investors that kind of react with the market, those are the investors that underperform the market and make bad decisions and don't do very well in the stock market. And that's what you got to be careful of. So that's kind of the mindset that you want to be in when these sort of things happen. Next thing is small market caps. Big thing about Tattooed Chef is you got to remember it is a small market cap companies, and sometimes people forget about this. Some people that invest into these sort of companies don't realize what they're getting into. Some people buy Tattooed Chef and think it's going to be like a Facebook, like a Google, like a Microsoft. Them sort of companies can bring out horrible earnings or amazing earnings and the stock will move 5%. A company like Tattooed Chef that's a small market cap, doesn't take much to move a company. This sort of company can move 5% on one day. When it comes to earnings, you've got to realize that these sort of companies have a little bit more risk to them, have a little bit more volatility to them, and some news comes out with these companies and bang, you can move 20% in one day. And sometimes people forget that, and sometimes people are surprised and get a bit emotional and can't handle the emotions when they see that movement in their portfolio or a position moving up and down that much. So sometimes you've got to remember what you are buying, and what you are buying with Tattooed Chef, you've got to consider there'll be a bit more volatility there. And I think that caught a few people out, especially after the earnings. And also it kind of ties in with the next point, which is anything can happen in the stock market. With Tattooed Chef, before earnings come out, me personally, and this is something that I learned and also got to keep remembering, and I know other people did it as well, is I looked at a stock like Tattooed Chef when it started going $20, $21, and I was thinking, realistically, can Tattooed Chef go down 25% tomorrow? I didn't think so, and I don't think anyone else would have thought it would have moved 25% down after 7 days after reporting earnings. But anything can happen in the stock market, and you've got to be ready for them sort of situations. And that's how I always try and think about it, is like worst case scenario, because you think, oh, this stock's doing absolutely amazing, might be your best performer in the stock market portfolio for 12 months, but all it takes is a sudden change in momentum, a news article, some earnings that aren't to expectation, and the stock price can fall off a cliff, and you've just got to be ready for that situation. It's same with like a stock market crash. You've got to be prepared. You know, everyone always goes on about, there might be a stock market crash this year, but realistically, you don't realise there's a stock market crash coming until it's happened. It's same with Tattooed Chef. You don't really realise that's going to lose 25% until you go, no way, Tattooed Chef just gone down 25%. And you've got to be prepared for them sort of situations. And as you probably know, those situations are normally the times that are the best to make money on. And that's a bit, Tattooed Chef drop was a bit of a reality check that in the stock market, things can take you by surprise, and you've got to be prepared for them. My next point is invest for the long term and not quarter over quarter. And this is probably the big thing that I saw over the last kind of couple of weeks with Tattooed Chef. I've seen a lot of people claim to be long-term investors, and they go, oh yeah, I'm investing this for the long term. And after investing into this company and claiming to be long-term investors, you have earnings which drop 25%, and that starts challenging a lot of mentality in the stock market. And it really does start to dig in if you believe in the company. And where a lot of people go wrong in the stock market and underperform the stock market is they see a drop in the share price in the short term and think, oh, I don't want to do this. I don't like this company. I don't want to invest in this company. Or this company is a bad company now because it dropped 25%. I'm going to sell the company. Now, what you have to do is understand your company and also think about where it's going long term. When I buy a company, I think, okay, where's this company going to go in the next kind of 2 to 5 years? Some people saw these earnings and reacted off a quarter over quarter period. Now, don't get me wrong, and I made a video about this. I made a video, and I probably should have been clearer about it when I made this video. I made a video going, yeah, I'm disappointed about these earnings. At no point did I go, right, that's it, I'm selling this company, I don't want to own it anymore. I was disappointed, and this is the thing about making content as well, is I get to see quite a few different people's opinions in the comment section, and quite a few people on there were like, oh, I'm getting rid of Tattooed Chef, and they reacted over a quarter period, rather than if they're actually a long-term investor. When you invest into the company, you should be predicting where it's going to be in the next 2 to 5 years. If you're investing over a quarter, you're going to struggle, because there's going to be companies that you invest in, and when they report their earnings for a 3 months period, there's a slight chance that there's some numbers that's a bit of a miss. Maybe revenue's a slight bit of a miss. And sure, it might affect the company a little bit in the short term, but as you as a long-term investor, that shouldn't really bother you, because you have a vision where you expect the company to be even further down the line. And the big thing as a long-term investor, you want to be looking at an earnings report and thinking, and this is why it's so important to research your company, go through the conference calls, go through the earnings, understand what's going on with the company, and you want to be looking into that company and thinking how the fundamentals going. Because if you look at that quarter for Tattooed Chef, the fundamentals were pretty strong, because you think, okay, they've got more stores now, they've got more SKUs in every store, more products, more partnerships. As a long-term investor, 2 to 5 years, that's really going to help the revenue and profit grow. Sure, right now, the quarter over quarter numbers was a slight miss, but I'm more bothered where it's going long term. And as a long term investor, you should be locked on to where the company is, the stock price is in the short term. You're thinking, where is it going to be in the long term? Short term price movements shouldn't really affect the company. And if you're a long term investor, a 3 month period shouldn't affect you. If you start having that, where you start reacting off a quarter over quarter. You are going to have plenty, if you're a long-term investor, you're going to have plenty of companies that have a quarter where they just miss some numbers slightly. It's going to happen all the time, and the share price might move up and down a little bit after that. But that shouldn't bother you when a 3%, even a little bit of an overreaction of 25%, shouldn't really bother you too much as a long-term investor, because a long-term investor, you're thinking, where's the stock price going to be in 2024, 2025? And a 25% dip won't mean too much when you'll be up over 100% on a company potentially. And that's the big thing you got to kind of remember. And last thing is, cash is king. And like I said earlier on the video, when you have a 25% dip on a company, normally if you love the company and you have a 25% dip, that company's on sale now and you'd go buy it. You got to remember, 25% of an asset to lose that much is massive. And if you bought that 25% dip, you would have made some good money on that over the last kind of few weeks. At the same time, you got to consider as well, there were some people that sold on that dip at like $16, which is crazy. And that's what happens, and that's how people do underperform the market. But sometimes the dips are the best buying opportunities, like what you've seen over the last few weeks. And the big thing as well is, keep cash on the side. I always say like, you want to get investing because you don't keep cash on the side, you want to get investing. But there's also that part of it that you do want to keep cash on the side, because the best opportunities come from when you don't expect it, or anything can happen and take you by surprise. And they take you by surprise, and if you don't have cash on the side, you can't capitalize on them, and you want to be, because those are the best opportunities. And if you don't have cash, you can't take advantage of them. If you took advantage of the Tattooed Chef dip, you're probably looking quite good right now. It's saying that I'm sure many of you guys were invested in the 2020 stock market crash. How many of you guys were invested into companies, probably your best performing stocks? And if you don't have that on the side, you can't capitalize from the best buying opportunities. So that's a very important thing that you want to remember. So yeah, keep cash, otherwise you can't capitalize on probably the best buying opportunities when they come and sneak up on you. So yeah, hopefully the video was useful and just some really important things to keep remembering when you're investing into a company from the long term, and also to maybe capitalize on overreactions, and also having the cash there to capitalize and make money off them overreactions, I guess. So yeah, hope the video was useful. If it is, hit the like button. If you're new and you found this video helpful, subscribe, and I'll see you next video.